Ladies and gentlemen, good day and welcome to Vishnu Chemicals Limited Q2 FY'25 results conference call hosted by PhillipCapital Private Client Group. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinion, and expectation of the company as on date of this call. These statements are not guarantee of future performance and involves risk and uncertainties that are difficult to predict. As a reminder, all participant line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Apurva Shah from PhillipCapital. Thank you, and over to you, sir.
Yes, thank you, Shifa. So, good evening, everyone. On behalf of PhillipCapital Private Client Group, I welcome all of you to Q2 and H1 FY'25 earnings conference call of Vishnu Chemicals Limited. From the management, we have Mr. Siddharth Cherukuri, Joint Managing Director, and Mr. Hanuman Pansali, Vice President, Finance and Strategy. I now hand over the conference call to Mr. Hanuman for his opening remarks, and then we will open the floor for question and answer. Over to you, sir.
Thank you, Mr. Apurva, and good afternoon, everyone. We welcome you all to the earnings call update of Vishnu Chemicals Limited. I will start with the financial performance achieved during the second quarter of the current financial year. On a consolidated basis, the company recorded operating revenues of 343.8 crores in Q2 FY'25, an increase of 12% on a Y-on-Y basis. The consolidated gross profit was 147 crores in Q2 FY'25, an increase of 6% on a Y-on-Y basis. The consolidated EBITDA of the company stood at 45.1 crores, a decrease of 2% on a Y-on-Y basis. The consolidated PAT of the company in Q2 FY'25 was 22.8 crores, a decrease of 5% on a Y-on-Y basis. On a half-yearly basis, the company recorded operating revenues of 682.7 crores in H1 FY'25, an increase of 12% on a Y-on-Y basis. The consolidated gross profit was 298.8 crores in H1 FY'25, an increase of 7% on a Y-on-Y basis. The consolidated EBITDA was 100.8 crores, an increase of 4% on a Y-on-Y basis. The consolidated PAT of the company in H1 FY'25 was 53.3 crores, an increase of 1% on a Y-on-Y basis. The domestic to export sales mix on a consolidated basis was 57:43. This was driven by a robust demand environment in the domestic market. The company continues to remain cautiously optimistic about the recovery in the export market, which continues to face challenges due to geopolitical and inflationary pressures. The EBITDA and PAT margin of the company was impacted due to rising cost of raw materials, higher fixed costs due to scheduled maintenance taken during the quarter, and an impact on export due to multiple factors as mentioned earlier, like higher freights, geopolitical issues, and sustained increase in disruptions in global supply chain. On the barium side, the profitability continues to improve due to process improvements, diversified product mix, and operating leverage improving in the business. Fundamentally, the balance sheet of the company remains strong, with consolidated debt to equity ratio at 0.45 times and current ratio at 1.58 times. The consolidated net debt to equity stands at 0.32 times, with cash and cash equivalents at 100.1 crore as on 30th September 2024. I would now request Mr. Siddhartha Cherukuri, Joint Managing Director of Vishnu Chemicals Limited, to share his views on the strategic expansions done by the company during the financial year. Over to you, sir.
Thank you, Hanuman. Good evening, everyone. In financial year 25, we have entered into a definitive agreement to acquire business that aligns well with our portfolio, enhancing both our operational capability and resilience to external pressure. On August 24, the company entered into definitive agreement to acquire Jainshri Pharma Private Limited, which helps in expanding our presence of the company in Visakhapatnam. On November 24, company has achieved a milestone by entering into a definitive agreement to acquire a chrome mining complex through its subsidiary in South Africa. Our cash-rich balance sheet, coupled with a low debt portfolio, continues to provide us with flexibility to invest strategically in the assets that drive long-term value for our shareholders. Overall, we are pleased with the progress we have made in executing our enterprise strategy in a tough business environment. We continue to balance our long-term growth objective with the realities of the current market conditions, positioning ourselves for sustained success as we navigate through these uncertain times. With this, I conclude my remarks. We can now commence Q&A. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have first question from the line of Sagar Jethwani from Phillip Capital. Please go ahead.
Yeah, thanks for this opportunity. Sir, I have a few questions. Can you share the volume performance of chrome and barium segments? What led to the slowdown in chromium segments? Can you elaborate on that? Second is that the soda ash prices have been trending lower. So that is one of the important RM for us. So considering that fact, the gross margins were still lower. So can you provide the details of that as well? How did the RM basket move? Third is that how do you see the H2? What is the visibility for remaining part of financial year 25? Lastly, there was a 20-day scheduled maintenance at the Vizag plant. So what was the requirement of this maintenance? Can you throw some color on that? That would be helpful. These are my questions. Thank you.
Thank you, Mr. Sagar, for your question. This is Hanuman with you. The volume in both the chromium chemicals and barium segment remained stable during the quarter. In fact, the volumes were quite robust in both the segments that we operate, that is chromium chemicals and barium chemicals. Despite the scheduled maintenance taken during the quarter, we had higher inventory of finished goods that helped us meet the requirement of our customers globally. Coming to your second part of the question, where you mentioned about the lower soda ash prices seen during the quarter and the impact of it on the gross margins. Your observation is correct. The soda ash prices have been on a downward trend for quite some time now. However, I'd like to mention that one of the major costs in raw material is the cost of minerals, that is chrome ore and barytes. And the prices of both chrome ore and barytes saw an unprecedented rise during the quarter gone by. And that led to pressure on the margin profile. Having said that, we did not see any pressure on the volume front as we mitigated the slowdown in the export market by shifting more volumes in the domestic market. Thereby, we did not lose any market share and also continued to remain available for our customers in the markets in which we operate. The visibility for the rest of the year, in comparison to the first half, is on the positive front, especially because of the acquisitions that we have done. So, taking this trend forward, we are looking to improve our operating levels as well as margins in the overall business at a consolidated level during the second half of the financial year. Having said that, I would like to still emphasize on the fact that the key factor over here for us to monitor would be the trends in raw material prices, the freight expenses expected to be on a downward trend, but still we have to observe that more keenly as we step ahead, because that is one of the key factors that is leading to changes in the global demand, especially from export markets. And third, but not the last one, is the geopolitical issues that are thriving in the current environment. On the scheduled maintenance, we are a manufacturing company. In fact, it's one of the most heavy manufacturing plants that we operate in Visakhapatnam. And every year we take a scheduled maintenance of close to about 30 days. Here we took a scheduled maintenance of about 22 days in the second quarter, and the rest 8 days will be spent over the year, will be taken over the year. So we don't see any major impact of the scheduled maintenance going forward in the second half of the financial year. I hope I've answered your question. Thank you, sir.
Yeah, I just want to follow up on my first question. Can you give the volume numbers, chromium and barium segment?
Thank you, Mr. Apurva. Thank you, Mr. Sagar. But as a company, we do not share the volumes in both the segments because of our competitive reasons.
No, growth numbers I was asking. Growth or degrowth?
It remains the same during the quarter. There was no change.
Just to add to that, the barium volumes have increased, especially on the barium sulfate, precipitated barium sulfate. As you see, we have, on a 6-month basis, we have recorded the highest revenue so far, which is our subsidiary company. So there is a volume growth, especially on the precipitated barium sulfate.
Okay, I'll fall back in the queue.
Thank you. We have next question from Sudhir Bheda from Bheda Family Office. Please go ahead.
Yeah, good afternoon, sir. Just wanted how these two acquisitions will pan out in next 12 months. One chrome mine and one that pharmaceutical company. How that will be EPS accretive or how it will pan out in next 12 to 18 months. Hello?
Hello.
Am I audible?
Yeah, Bheda ji. Good evening to you.
Yeah.
Okay, let me throw some light on these acquisitions. Again, like to clarify to you and to all that, this Jainshri Pharma, don't get carried away with the nomenclature. It's not a pharma company. It's an inorganic chemical manufacturing company. Idea is to produce, to add another value-added additive in inorganic chemicals, which will add to the basket of our products, especially going into the ferrite industry as well as ceramic industry globally. So this is our plan is to manufacture this value-added product in this facility. Tentatively, we are expecting the commercial production to happen in Q1 of FY'26.
And what would be the financial? How it will be EPS accretive or how it will be?
We cannot comment at the moment. We'll come back to you once we get closer to the commercial production.
And mining complex, if you throw some light on.
Yeah, sure. So, this plant has a reserve which is sufficient for us for the next 30 to 40 years. Also has a very efficient beneficiation plant which is suitable for the kind of raw material which we are currently sourcing from South Africa. With that being said, it is a very suitable asset for Vishnu Chemicals, considering a backward integration, and gives a lot of certainty to the raw material supply in the years to come. We are expecting this plant to be operational in the next 6 to 9 months from now. The share purchase agreement has been signed, and currently the paperwork is in progress. The rest of the work is in progress.
Okay, thank you. And sir, Q2, H2, do you foresee increase in EBITDA because the one-time charge will not be there? So the percentage term, what kind of growth do you see in the EBITDA?
I would like to say, it's also updated in our, news report that, the domestic markets are resilient. I think that keeps, that gives a lot more confidence in terms of maintaining volumes and increasing volume. export markets we are still facing certain headwinds because of aggressive pricing pressure from the peers in certain country, and also some logistical advantages they have, especially being in Africa and Europe, which they are able to leverage on the lower logistics cost, which we are trying to address to some extent. And also, since we are witnessing some sea freight adjustments, downward adjustment, that's also giving us some benefits which we are able to pass on to the end users. So we are expecting some a marginal volume growth in chrome business during H2, and a sizable volume growth in barium business during H2. That's what I can say. I would not be able to comment on the EBITDA at the moment. We don't know where the rupee dollar would be and the raw material costs.
And can you quantify what was the one-time charge was like in Q2?
Good afternoon, Mr. Beda. This is Hanuman with you. The one-time administrative expenses were towards the acquisitions that we made during the quarter. So it was already expensed in our P&L in the Q2, and there won't be any further expenses.
No, can you quantify that? What amount-wise, if you can quantify, so that we get the clarity on the EBITDA margin?
I don't have the exact number in front of me, but probably I can get back to you later on this.
Yeah. Thank you for the opportunity and all the best.
Thank you very much.
Thank you. We have next question from the line of Rohit Sinha from Sunidhi Securities. Go ahead, please.
Yeah, thank you for taking my question, sir. Actually, my line was dropped in between, so maybe sorry for repeating question. One is on the variant side, as we have added our PBS capacity, so wanted to know how the PBS volume for utilization levels are there, and excluding the PBS, how the variant segment has performed in this quarter.
TBS for the whole financial year, including H2, we are expecting a volume growth of close to 40% compared to FY'24. Also, the order book is looking quite solid, strong as we move forward into H2. Currently, the operating levels of the plant are at 65-70% level. We are undergoing some debottlenecking to get it up to 80-90% level. And given the fact that we got approval from all the MNCs, paint companies, as well as mid-level powder coating companies in India, we are also looking at adding capacity in the next 2 years from now, because with the current capacity, we'll be able to only service the domestic demand. With that being said, I think probably in FY'26 or FY'27, we'll be looking at adding capacity in barium sulfate.
Okay. And that the capacity size would be roughly how much?
We are planning to double the capacity by FY'27 of precipitated barium sulfate. Currently, which we are saying is 30,000 tons. Considering operating level of 80-90%, we will have to take it up to 60,000 tons, considering an operating level of 80%. So we're looking at least 50,000 tons of precipitated barium sulfate in next 2 years.
Okay. And just wanted to know, in Q1 we have more than 80 crore kind of top line from subsidiary. This quarter slightly Q1 it was down. So is it because of the volume side or the pricing was slightly on the weaker side?
Sorry, please repeat your question.
On the subsidiary side, last quarter the revenue was slightly down. So is it on the volume because of the volume issue, or there was some pricing decline also?
Hello. Good afternoon, Mr. Rohit. The impact of there's no decline in volumes or the value in our barium business during the quarter. There's a marginal impact of less than 2% on the operating revenues in the barium business, which we are anticipating to cover up in the quarters to follow, with both higher volumes and value realizations to improve. I would also like to add that during the quarter gone by, the barium business achieved one of the highest PATs in the quarter in the last 12 quarters that we saw. And the EBITDA margins in the business were in excess of 16.75% in Q2 FY'25 for the various business. So we are quite upbeat around the business, and we hope to continue delivering value to our customers for the rest of the year.
Okay. And with expecting better volumes, better utilization level, so are we expecting further improvement in the EBITDA margin for the subsidiary, or what sort of range we should be expecting in barium business?
Correct. The EBITDA margins for the subsidiary business is expected to improve, and from the current levels of around 16.75%, we expect it to increase over the next 2 quarters by 100 to 200 basis points.
Okay. Great. And just on the overall business, just one question from the Red Sea issues we have been facing for some time. So are we seeing any improvement in terms of shipments, or how we are actually looking at this situation right now, and maybe down the line in next few months, how we would be looking at it?
It has been a matter of concern for the last, especially the quarter 2, because the sea freights have been quite volatile and an upward trend. Especially in the quarter 3, towards the end of quarter 3, what we are witnessing now is the sea freights have come down and kind of stabilized. Although they are not to the level what we have seen before the Red Sea issue, but we are hoping it will get there probably by quarter 4. And most importantly, we as a shipper, we would expect the freights to be stabilized and have a more certainty on the availability of the equipment and the freights, and rather than them to be volatile. But so this has been a concern, especially during the quarter 2, and things have kind of come down and settled at the moment. We are hoping they will get better in the quarter 4 as we get into quarter 4.
Okay. And one last question, if I can squeeze in, just on this mine acquisition angle, and once this benefit would be coming into the business, probably obviously we have a thought process of looking at a better margin after that. So on that question only, I mean, what best margin expenses we can expect?
Let me start off by saying this acquisition will improve our cost position, not just locally but globally. We'll be the lowest cost producer, especially coming to all chromium derivatives. That will give us a lot more leverage in terms of increasing volumes, improving the margins, better operating leverage, and having a strong position in certain derivatives as we move forward. Most importantly, this will give us a lot more certainty to the critical raw material, which is chromite ore, and it makes a significant difference, especially on the operations point of view, when you use a product which is a lot more consistent than coming from different mines. So from the operation point of view, there will be a lot more stability and certainty on the yields. Definitely, it will improve the EBITDA margins. I won't be able to quantify right now, but I would say at least to a level of 2 to 3% at a full operating level in 2 years from now.
Okay. That's it from my side, sir. Thank you and all the best.
Thank you very much. We have next question from Drashi Zaveri from Crown Capital. Please go ahead.
Hello. Good evening, sir. Thank you so much for taking my question. Hope I'm audible. Hello.
Sorry, your voice is not audible.
Hello. Good evening, sir. Hope I'm audible right now.
Yes, sir.
Yeah.
Yes, please continue.
So, sir, just wanted to, get a sense, in case, so this quarter, our margins have gone down a bit. So, just wanted to know, in the 22-day shutdown, how much revenue impact would it have happened, and what would be the one-time, administrative cost that would not come in the next quarter? So, could that be quantified?
Thank you, Mr. Dashil, for your question. As I answered during the call earlier, that there's no impact of the schedule maintenance on the revenue side of things because we were holding a higher inventory of finished good, as we had already mentioned during the Q4 of last financial year and Q1 of the current financial year. To maintain continuous supply to our customers globally, we were maintaining higher inventory of finished good, which help us in this entire phase of shutdown for the schedule maintenance to in our Visakhapatnam unit. And the impact was more on the expense side, as we had to incur more fixed expenses without production. So that added to a little bit pressure on our EBITDA margins. And having said that, most of the impact is because of the higher raw material costs, as you could see in our gross margin profile, and the slowdown in the export market, which led to a little bit shift in demand from export market to the domestic market. On the administrative expenses, as Mr. Bheda had asked this question earlier, the amount is suboptimal. It was close to about 50 lakhs, and that we had incurred for the acquisition and the advisory fees that were paid during the quarter.
Okay. Fair enough, sir. So just wanted to know, in terms of can we have a guidance in terms of revenue and margins for the full year FY'25? I think most of our costs has gone, that everything that's even the maintenance shutdown has been already incurred in H1. So overall H2, could you just if give us a guidance, how will the revenue pan out, and margins that we can expect going forward? Can we come back to 16% margin that we did in Q1?
The current situation is quite similar to as it was in Q2, except for the freights that have started to coming off. However, we are yet to see the full impact of low freights on the demand from the export market, and thereby it's imperative for us to be very watchful and diligent in this current situation. We won't be able to give you a guidance, but as a company, like we highlight both the negatives and the positives with the headwinds and tailwinds, we are sharing with you whatever data is available with us. And if things improve from here on the chrome side, you will see that the standalone profitability also improves. Now, we are quite confident about the improvement in the bearing business as we are progressing. But on the chromium side, we will be continuing to monitoring the situation and keep you updated on the quarterly calls as we progress.
So fair enough. Yeah, that's it from my side. All the best. Thank you.
Thank you.
Thank you. We have a question from Chirag from White Pines. Please go ahead with your question, sir.
Yeah, thanks for the opportunity. So the first question is on the chrome imports that you do. So how frequently you do it? Say, does it happen every month? It happens once a quarter? Hello?
We do it quarterly.
Is that you had a high cost inventory which will get absorbed, or it has got absorbed, or there will be some spillover effect in Q2 also?
There could be a
Q3
spillover
also,
effect.
Q3.
Yeah, there will be a spillover effect, but since it's not for a 6-month or yearly period, it could be a marginal spillover effect.
Okay, so the large part of the spillover, the large part of the high cost inventory is there in Q2 itself. That is the right way to understand?
No, it will be in Q3 as well, not extending beyond Q4.
Not extending beyond Q4. But if it's a quarterly inventory cycle...
Not extending beyond Q3, excuse me. Not extending beyond Q3.
Because if it's a quarterly cycle, then it should get consumed, in 90 days. So you said half of this quarter and half of Q3 is how one should try to understand.
Yeah.
Okay. And you indicated that it has reverted back to its normal pricing, right? There is a decline in the chrome ore prices sequentially.
Yeah. So your question is the prices decline, is the raw material prices decline and the finished product prices decline? Is that what you're asking?
No, raw material. I'm just focusing on raw material because of gross margin issues.
Now the price of chromite ore has come down mainly on account of raw material, mainly on account of sea price adjustment. So that is going to reflect in quarter 4.
Of course. And if I understood your point correctly, while you had a high cost inventory, you are not able to pass on the prices because of higher competitive pressure in the export market. Hello? In
Low demand as well, and subdued demand in the export market as well.
Subdued demand in the export market also. But that would be the case in Q1 also, right, sir?
Yeah, that's right.
So sequentially, demand pressure has not aggravated.
The demand pressure has not aggravated. It is where it is, but it's just what has added to it is the logistical challenges.
Okay.
Which added to the demand pressure as a headwind.
Okay. Because sequentially also there seems to be pressure on gross margins. That's what I'm asking. So I thought, is there any increased pressure coming from competition
No, because as you see, our other costs have increased mainly on account of logistics.
So I'm looking at gross margin, sir. Only gross margin. Sales minus RM.
Yeah. Understood.
Okay. And second is, if you can just help us give a refresh on the acquisition that you did, that Jayanshri Pharma. So how does it benefit? When does it will start trickling down in revenue, and any initial investment cost that could have an impact on P&L before it really helps us in generating revenue and profitability?
On the acquisition of Jayanshri Pharma, it's a strategic acquisition, primarily for 2 reasons. One is we have acquired a gross block of nearly 80 crores and a net block in excess of 50 crores for an enterprise value of 51.99 crores. The acquired unit is going to produce a new inorganic chemical, and it will be our foray into strontium chemistry, which is a chemistry where we are already built sufficient expertise in. That is to convert minerals coming out from the planet into different chemicals. And here we are starting with strontium carbonate. Strontium carbonate has a global demand of about 2.5 lakh tons. And silicite is the main mineral used in the production of strontium carbonate. There's a huge demand of this chemical in sectors such as electronic industry, flexible and permanent magnets like ferrites, and also the ceramics industry. It's a complete import substitute. Right now, there is no other player that's producing this in India. And from what we are seeing, it is going to be a play on the growth of electronic manufacturing in India, as it will be useful in producing ferrites, which in a way is going to be consumed in areas such as automobile industry, in the electric motors used in the four-wheeler segment, in speakers, in all electronic devices, sound systems, wherever there is a demand for specialty magnets. And also it goes into ceramics and tiles industry, where we are already having a good marketing presence in both chromium chemicals as well as barium chemicals. Strontium carbonate is very useful in glazing and enameling of ceramics and it will be a addition to our portfolio once it starts operating, probably in the Q1 of the next financial year. So
and the imports would be coming from...
Yes, please.
Sorry. Please continue.
So we are quite upbeat about this acquisition, and we'll start work on the plant and equipment to make certain upgradation and start the production from Q1 of next financial year.
So, sir, will there be some incremental cost that would come P&L which you would like to call out? Because it is better to indicate the impact, because it's kind of one-off, right, before the revenue starts flowing in.
Oh, it will be a capex. It will not be a cost that will be expensed.
Okay, it will be a capex.
Yes.
Okay. Sir, and the import is happening from China?
No.
Or via China?
The top importers of strontium carbonate, as per the data that is available in FY'24, were Mexico and Germany, which was nearly about 77% of imports in India.
Okay. And once we have a local plant ready, we would be definitely cheaper than them. That would be the right way?
We will be a lot more competitive.
Okay, we will not be cheaper than them. We'll be competitive with them. That's how we are saying.
We will be competitive, yes.
Ideally, given it is an import and we are doing domestic manufacturing, ideally there should be a significant cost difference in our favor, right?
Yes. But we'll follow where the market is.
Yeah, that's different. That will reflect in the profitability.
Yeah.
That will reflect in the profitability. And sir, what kind of revenue can be generated from this 50 crore gross block?
Right, it's hard to quantify, but at the peak, at the full operating level, considering a 10,000 ton production, probably 2 years down the line, we'll be looking at 140 to 150 crores of revenue from this product. Could be upwards of that, but conservatively.
Okay. No, this is, I understand it's also a function of what is the realization and all that, but ballpark 150 crore based on current prices.
Yes.
That's how one should look at it,
Right.
Right. Actually, a very different question on the South Africa mine. So what is your thought process in terms of challenges in operating the mine in a country like South Africa where labor challenges have been there? And why was the mine shut for a very long time and nobody was interested in looking at it? So these are two separate questions and we're studying it there. But we understand that it is a reasonable challenge to manage labor in South Africa.
I partially agree with you, but beg to differ on certain observations which you have made. South Africa is a home to the world's largest reserve of chrome ore, making it a key global supplier. Yeah. The mineralogy of chrome ore in that region is very, very much suited for our production. Additionally, the mining is deeply embedded in the culture with a very skilled workforce and a good logistics support internally. And relatively, I would say relatively stable business environment compared to the other African, like West or East Africa. And most of the mining is operated by multinationals who are listed companies in Europe, like Anglo Platinum and Semencore and Glencore. So I think the business is operated in a very structured way there, especially with the MNCs being present and very active.
But and then why was the mine shut for such a very long time? Nobody was keen on looking at it as an asset. So there has to be some specific issues that would be there, right? Because we have got it a reasonably good price.
I can only share with you what we hear from the management during our discussion. It was more strategic reasons because this company has been taken over by other multinationals. We are acquiring this from a listed company in US.
Okay.
So they have taken over another company in the year 2016. So it was not strategic for them to operate this asset. So it was more to do with the strategy on how that particular organization is looking at this particular asset. That's why it was under care and maintenance. So they are not selling this asset for financial reasons, financial challenges.
Okay. So this helpful. It clarifies. So initial, what kind of OpEx, CapEx that you will have to do, because the mine was not operational for a reasonable time. Initial OpEx, CapEx that you will have to, and also the time you will require to get the manpower and everything in place. So if you can just, once you get handover of the asset, what your initial estimate on that side in terms of time frame, in terms of investment?
Currently, on care and maintenance, the plan is to restore the mine and processing plant post completing of acquisition.
Yeah.
We've already quantified the investment. It is marginal, but I won't be able to give you the exact number at this moment. We are still working on it. But it won't be a substantial amount. That's what I can say, because it's been kept in a very, very good condition, even during the care and maintenance time. Of course, we have to do some improvements to get the maximum output of the facility, which we'll definitely work on.
Mm-hmm.
And like I said, the acquisition will be completed within 12 months from the date of signing, and subject to customary closing conditions, including regulatory approvals.
Yeah, fair point. That's absolutely fair. And getting the manpower and
Sorry for interrupting, sir. I would request you to rejoin the queue as we have more participants.
Just one follow-up, it was pending. So on the manpower side, how much? It's not a challenge for you to get the manpower, right? Over there. So it should to start on the mine.
Manpower are already there. They have not fired any employees during care and maintenance.
Yeah, this is helpful. This information was not there. Thank you very much.
Thank you.
Thank you. Next question we have is from Kushal Sharma from Equinox Capital. Please go ahead.
Hello. Hi, sir. Am I audible?
Yes, sir. Please go ahead.
Yeah. So actually, as we have two kind of products like barium and chromium, so could you please explain the current capacity and in terms of metric ton per annum and the capacity utilization, and what is the size of the respective industry in India and globally? And my second question is relating to our working capital side. So if we see that our inventory levels and debtor levels has been stretched out from 2021 to 2024. So could you please explain the reason of that? And my last question is on the related party side. As I can see on your consolidated balance sheet that we are having some transportation cost from our some of the concerns in which KMP is interesting around 38 crores of rupees. So could you please explain what is the rationale of these kind of transactions in your books?
Yeah. Good afternoon, Mr. Kaushal. On the chromium chemical side, we have a capacity of 80,000 tons per annum, measured in terms of sodium dichromate, which is the primary chemical manufactured in the entire universe of chromium chemicals. And in barium chemicals, we have a total capacity of close to about 90,000 tons per annum, comprising of two products, barium carbonate and precipitated barium sulfate, with capacities of about 60,000 tons and 30,000 tons respectively. In chromium chemicals, we are the largest producers in India, and so is the case in barium chemicals. In terms of market share, nearly 50% of the market in India is catered by Vishnu Chemicals in chromium chemicals vertical, and the balance is catered by imports from geographies such as South Africa, Turkey, Russia, Kazakhstan, and United States of America. On the barium chemical side, we have two products, like we mentioned, barium carbonate and precipitated barium sulfate. Both of them have different end user segments, and while barium carbonate goes into industries such as ceramics and tiles, building materials, construction of bricks, water purification or brine purification in the caustic lye industry. Precipitated barium sulfate goes in the industries such as powder coating paints and batteries. In barium carbonate, we are the largest producers in India with a market share of close to about 40%. And in precipitated barium sulfate, we are the largest producers and the sole manufacturers in India. Last year, we had a market share of close to about 15%, which is currently expanded to close to 30% as I speak to you. The balance 70% of precipitated barium sulfate's requirement is met through imports in India. The inventory levels, as you mentioned, have increased compared to our historical years, primarily in line with, like we mentioned, the increase in raw material prices and the increase in transit times over the years. So we are maintaining more inventory for both raw materials as well as finished goods to meet the requirements of the customers and have sufficient raw materials at disposal to manufacture, even if there is a lag in logistics or if there is a delay in logistics. We hope that that situation improves from where it is today, but we have been seeing higher raw material costs for nearly 2 quarters now. On the related party expenses, like you mentioned, it's towards the transportation cost that's paid to Vasanta Transportation, a company that is promoted by our promoter group, and that is mainly for the movement of raw material and finished goods from the port to the factory and from the factory to the customer sites. We have been compliant with the disclosures, and overall, it's all the transactions done with the related party company is in line with industry standards and on a arm's length basis. And overall, they are less than 2% of our overall turnover of the company in terms of expenses.
Okay, sir. Thank you. And can you please let me know about the industry size in terms and how is they growing in respective products like chromium and barium? What is the industry size in India and globally, and how is it growing?
On the industry side, chromium chemicals has different products, and on an average, these products are growing in the range of 3% to 6%. There's a global volume market size of close to about 800,000 tons of sodium dichromate. And in that context, with our 80,000 tons of capacity, we have a market share of close to about 8%. And we are present across the entire value chain of chromium chemicals and have been the largest integrated producers of chromium chemicals in India for quite some time now. Till FY'16, we as a company were very much focused on 2 products, sodium dichromate and basic chrome sulfate. In the last few years, as a company, we have pivoted our strategy and now invested and focused on different derivatives and value-added products. That has helped us expand our customer universe and also mitigate any cyclicality that arise out of the end user industries. We have built quite a few unique capabilities over the years, and some of them are like scale, self-sufficiency in some of the key raw materials, our focus on return on capital employed or asset sweat, and all of these are making us one of the lowest cost producers of chromium chemicals in the world. And we are working more towards enhancing this position through the acquisitions that we have made in the current financial year.
And sir, could you please explain me the key raw materials of both of the products so that we can
I request you that we can connect offline, as there are more people on the queue. So probably we can take it offline and I can run you through the company.
Sure, sir. Sure. Thank you very much.
Thank you.
Thank you. Next question we have is from Rohan from Total Capital. You may go ahead, please. Mr. Rohan, your line is unmuted. Please go ahead.
Thanks for the opportunity. Like I was dropped from the line, so some of my questions would be repetitive. Hello?
Yes, yes. You're audible, Mr. Rohan.
Yeah. Thank you. Yeah, so my question is that some of a couple of quarters back, you gave a guidance that we would be achieving a top line growth of in FY'25 around 30-35%. But seeing that our half H1 performance, it looks like what's the plan? Like, can we still be able to do that? Hello?
Good afternoon, Mr. Rohan. For the first half of the financial year, we have achieved a top line growth of about 12.2%, and we have witnessed revenue growth in both chromium chemicals as well as barium chemicals. Particularly, we are expecting that the barium chemicals revenues are expected to improve in the rest of the financial year, and we are still looking to improve our overall top line growth compared to the last financial year.
Yeah. So considering that what you explained as the industry dynamics, so we might have cut down our guidance from before it was from 35%. So can we expect a 50% growth this year?
The guidance was not for the top line growth. The guidance was on the volume growth in barium chemicals. So we had guided for improved volumes on a year-on basis in the barium chemicals business as we launched precipitated barium sulfate last year. So that is giving us increased volumes as well as revenues in our barium chemicals vertical.
Okay. And what we have observed is that over say last 10 years, seeing that how our gross margins have increased and what capex we have done for improving our operations, and we have backward integrated, the margins are not being reflected into. I'm talking about chromium side. The margins have been not reflected. So where have the issues been where we cannot solve?
Maybe on due to the subdued demand in the export market, the prices, end product prices are under pressure on account of softer demand and higher logistics costs. But thanks to the backward integration, what we have done 2 years ago, I think that is really supporting the gross margins to stay at the range of 40% levels where we are. But we are anticipating improved demand environment during FY'26, and also the logistics cost seems to be coming down. Hopefully by Q4 it is back to the pre-Red Sea levels.
Okay. And considering that now we have did a acquisition of a chrome mine and processing plant, that now we have completely, we can say we have went backward integrated while securing our raw material supplies. So like how much of our requirement will be catered by this chrome mine? Will it be complete?
Yeah, well, that's the plan, to acquire this mine to suffice 100% of our requirement, but obviously it will be in a phased manner. Probably it will take a year, 2 years from now to get to that, to suffice our 100% requirement from this particular asset, which we own in South Africa.
And considering now we have secured our raw material supply, so what are your plans for chromium downstream products? Like, are we planning any expansion in some of our downstream products? Because now we have our supply secured, as well as you guided that you wanted to take our market share, international market share of 8% to say 12 to 13%. So that's something like 40% increase in our market share.
It's very likely to happen. Currently, we are working on it and also looking at another value-added product, chromium metal, to be launched during Q1 of FY'26. That's where we are quite busy with this new product launch in FY'26, as well as this chrome mine acquisition, which will also conclude hopefully by first quarter of FY'26.
Okay. So, can we expect that all of these actions will take us 2 to 3 years to start reflecting in our financials, like improved in margins, new avenues, new CapEx coming into play?
Sooner would be better, I would say. I think that we are expecting this to fall in place by H2 FY'26, especially with partially the mining complex operating and giving us able to feed a sizable volume of our requirement by H2 FY'26, and also chrome metal falling in place as another value-added product, which is also margin effective. I think this should definitely see some improvement in terms of revenue as well as EBITDA margin growth by H2 FY'26 is what we are anticipating.
Okay. And considering that current market situation are very volatile, it might be difficult for you to also answer this question. But I just wanted, like considering all our CapExes and what plans we have in play, as well as the operating leverage that will play out. So where can we see Vishnu Chemicals, say, in 3 years down the line? Where would it be from current 1,200 crores of top line and 16% of normalized margin? How can we see that it plan out in next 3 years?
I think let me go back to what we have said. Our objective is to grow at least at a 20% level year on year. Maybe in certain challenging years like this, we have to revise our guidance. But I think our idea is to grow and be sustainable as we move forward. With that being said, with this value-added products, there'll be at least a 15-20% growth on a year-on-year basis. And definitely this Chroman acquisition will underscore the sustainability in the margins profile as we move forward.
Okay. And just one last question on barium side. What we observed is that quarterly basis, the gross margin on barium side is a lot volatile. If you compare last 5-6 quarters, it has been from range of say 40%, 44% to 73%. Now it's to 50%. So can you explain this volatility in gross margin?
On the barium side, the gross margins is improving because of the improved product mix. We have diversified our portfolio, and that is giving us overall better efficiencies in running the plant, as well as we are operating the plant at a higher level of utilization. At the same time, the gross margins have also improved because of the acquisition that we did in the last financial year of Ramdas Minerals Private Limited. That has reduced the overall cost of production in the barium vertical.
Okay. So considering going forward the stability in this barium division, can we expect margin expansion from here on?
Yes. So we are anticipating an increase in the barium chemicals margins and profitability as we go ahead.
Okay. Yeah. Thanks for answering. That was from my side.
Welcome.
Thank you. We have a question from Akshat Goyal from Nivshay. Please go ahead, sir.
Hello.
Yes, please go ahead, Mr. Akshat.
So, sir, regarding the mine that we have acquired, so are there any plans to sell the chrome ore that will be produced outside our own business? Is there revenue which the mines can generate for us?
Yeah. Hello, Mr. Akshay. It's Siddharth with you. Well, with considering short to medium term perspective, I would say no, because we need to stabilize the operation and first feed our furnaces. Probably in a medium to long term perspective, there might be some material available to the market, but like I said, this is a medium to long term perspective.
Okay. Okay, sir. And sir, can we also expect that by the end of FY'26 or H1 FY'27, we will source all our chrome ore demand internally with the acquisition of mine? Is it something like that?
That will be our endeavor, but I think in practicality we have to see. Like we said in our this thing that the expected closure of this mining deal will be within 12 months from now, including regulatory and other customary closing conditions. Hopefully, it should be happen sooner than that, but this is where we are today.
Okay. That's it from my side. Thank you.
Thank you very much. Participants, that was the last question for the day. I now hand the conference over to management for closing comments.
Thank you very much. In conclusion, kindly note that our results and investor presentation have been uploaded on the stock exchanges and the website of the company. We appreciate your continued support as we are working towards a future of sustained growth in both the chemicals that we operate. If there are any further questions, feel free to reach out to us on investors@vishnuchemicals.com. Thank you and have a good day.
On behalf of Phillip Capital, that concludes this conference call. Thank you for joining us. You may now disconnect your line.